I am not a financial advisor. This is not financial advice. Today, we are going to talk about the SPY ETF. So what is the SPY ETF? A little background on the SPY ETF. In general, ETF stands for Exchange Traded Fund. SPY ETF launched in 1993. It is considered to be the first ETF listed. What makes an ETF so unique? What makes it so unique is that it holds different stocks from different sectors. There's about 500 plus different types of stocks in the SPY ETF. In simple terms, this gives you exposure basically to the whole market through one stock symbol. The stocks contained in the SPY ETF are stocks that are from different sectors such as technology sector and financial sector. For example, 7% of the SPY ETF is Apple shares, which is a technology company. SPY has a low management fee of about 0.1%. So, for example, if you invest $25,000, the fee that they charge would be about $25. SPY is considered to be a low-risk ETF because it is very well diversified, as it contains 500 plus stocks, and it also has high liquidity. Here is a stock market map. This shows us different stock symbols separated into different sectors, such as the technology sector, the financial sector, communication services sector, consumer cyclical sector, and many more. Note, in this picture, the bigger the box, the larger the company is worth. So we see here how Apple, compared to Microsoft, Apple seems to be a little bit bigger than Microsoft. Here we see red and green colors. This shows us how the market performed the past day. You can find this graphic by yourself by searching stock market map on the internet. SPY zoomed out. Now I want to show you the chart of the SPY ETF zoomed out. This chart represents about 30 years of the SPY ETF. Why is this chart important? Because sometimes history repeats itself. I wanted to show you a zoomed out chart because when in doubt, zoom out. If we look at the dot-com crash, which was around the year 2000, we see in the past stock market that it took about a decade for the market to recover to its previous high. So the dot-com crash happened around the year 2000. The top for the SPY ETF was $155 per share back then. And at the bottom of the crash, it was $77. This means that the market saw about a 50% decline before it made any significant highs, which were higher than the dot-com height. So what does this mean for us? I'm not saying it will, but there is a possibility that we will again see a 50% crash or maybe even greater. So what would this look like? How would this play out? One example I want to share with you is if the recent high of 480 was the top of the market, then a 50% decline would be somewhere around $240. And here I drew a hypothetical scenario where the market could bottom. The market may keep on a downward trend until 2028, which is about 6 years away from today. And after this point, we may see the market start to recover. So if you invest now and we have a 50% decline from the recent high, the market may take a decade or so to recover. That's just something to keep in mind. If we look back in the history of the SPY ETF, and if we invested at the top of the dot-com bubble, which was around the year 2000, we see here that that investment would be underwater for about 13 years. Only for a little more than a decade, only after a little more than a decade, you would start to see positive growth on your investment. If you are investing for retirement and have a couple decades ahead of you, then investing a little bit from each paycheck makes sense and is a good idea. But if you're looking to retire in the next decade, one needs to carefully invest, as there is a chance that you won't see a positive return on your investment in the near future. To do a recap, what we covered today is overall SPY ETF is considered to be safe long-term investment because it is well diversified. SPY ETF is a good reflection of the USA economy because it contains over 500 stocks. The SPY ETF has high liquidity. This means you can enter and exit the market quite easily and at a reasonable price. Is it time to buy for you? It depends. As I mentioned, if you have a long-term time horizon, then investing into the SPY ETF might be a good idea. On the other hand, if you are planning to start using this money to live on in the near future, there is that risk that you might have a negative return on your investment. If you like this type of content, subscribe and click the bell so that you will get notifications when new videos get uploaded. Questions, comments? If you have any questions or comments, leave them in the comments section and let's talk about it. Also, if you have any topic that you would like me to cover, leave them in the comment section as well.